China has gone up so much, can we buy now? Previously haven't go up so don't want to buy. Now go up, can buy already. So I'm not asking you, can buy or not?
So this premise I think cannot buy. Because you buy because you think it will keep going up, right?
Yeah, I thought there'll be circuit breaker going up.
Actually, what's this circuit breaker thing? Can you explain to me?
I don't know, like I think I heard rumors that on Tuesday there will be a lot of people buying China stocks, then there'll be circuit breakers going up.
So let's take a step back, talk about this entire timeline of what happened this week, because I think uh, Chinese market has been closed for about 1 week. Last week, that was their golden week, right? Then market open on Tuesday. And right before market opens, there's all this rumor, right? People say that, okay, there are so many people open account and then they are going to keep on buying on Tuesday, a circuit breaker, confirm break, and all these things. Then what happened is that Tuesday, market open. Okay, China side at least is showing a green, right? Okay, because they are playing catch up for that entire 1 week of market closure. But Hong Kong side is already start dumping already on Tuesday. And then I think on Wednesday also it's not doing that well, right? So just want to, like revisit this entire timeline, right? Chicken, can you walk us through actually what happened? How should we interpret all this? Should we, pay attention to this news? Should we pay attention to whatever Chinese government is trying to do and actually what they want to do? Should we buy stocks now? Should we buy Chinese stocks?
all these all these questions, right? I'm not prepared beforehand, but I'll help you walk you through based on the best of my understanding. And 23rd, which is a Monday, 23rd of October, after the Hang Seng Index closed, it's confirmed that there will be a joint press conference between three very big ministries. The following day, which is the 24th, the Tuesday. So a lot of people were speculating that maybe we are going to get a very big policy announcement, or why these three specific ministries are coming together to talk. They started introducing more and more measures in a way, some of this policy stance. Then the market started getting very, very bullish. Then they started running on Tuesday itself because there were introduction of like triple R cards, some monetary easing, reducing interest rate, down payment for the second property gets cheaper. On that part, it's not necessarily anything exciting because let's not forget over the last 3 years, China has been in this bear market. They, from time to time, try to inject some sort of liquidity. But I think the straw that broke the camel's back was really the idea where they said they want to give unlimited support to leverage on the central bank's balance sheet to buy stocks. Both from two perspectives, meaning back the companies can go and borrow money from the central bank to buy back their own stock. Secondly, is the intermediaries, which is the brokerage houses, the investment house. They can pledge capital to the central bank, and then they can go out and leverage on the balance sheet to buy more stocks. So I think that in that perspective, it was a very interesting way of trying to stimulate the stock market specifically, or trying to boost this idea of a wealth effect. Meaning, if you all of us are participants in the stock market, if our stocks all go up, we feel richer. Then maybe you go out and spend more money to kickstart that cycle. So that's one part, and the second part is of course your stabilizing of the property market and whatnot. So I think all those are just a series of measures. But that's it. I think other than the reducing in interest rates, the reserve requirement ratio, other than that, there's not much very concrete examples of, I guess, what specific fiscal policy or how are they gonna what's the amount that they're gonna pledge. I think all those are still in the air. The only pledging was the 500 billion to buy up the stock market. Then if 500 billion is not enough, I can unlock another 500 billion. So then after that announcement, you see a big green candle. And then after that, I think subsequently, the next few trading days or next 2 weeks, you just keep seeing green candle, red candle a bit, green candle, green candle, green candle. Then that was that whole fiasco of a lot of the FOMO effect where people start to think that, hey, I shouldn't miss this out. Like this is an opportunity of a lifetime. And within that short period of 2 weeks, I think the Hang Seng, CSI 300, they're all up like 30, 40, 50% easily because there's a lot of FOMO buying. So that's the first part. Then on the second part, what really happened after the 1st of October was we know that the Chinese market was closed because of the Golden Week holiday. So they were closed for 1 week. And because and throughout that 1 week, we see a lot of rumors, specifically in Chinese social media. Then they bring on to X. They see monks opening account. They see people in crutches going to open account. And then I think when you are really big consumers of the social media, right, on Douyin, on Xiaohongshu, a lot of people ask you to 清盘, 抄底, everything 清仓. I don't know all the Chinese terms lah. Basically telling you to go all in, leverage, sell your house, go and buy. This is an opportunity of a lifetime. So that builds up a lot of FOMO, right? Because within that 1 week, the Chinese market is closed. Then after that, that's why you have that rumors of people saying when Tuesday, when the stock market opened, they were so-called circuit break. Yeah, on the Tuesday when the market opened, you see this very, very huge dump. The Hang Seng was down like 9-10%. And then similarly, it's from a greed atmosphere, it switched over to the fear atmosphere. Then you see people creating videos say, "Ayo, Hang Seng dropped 9%, still can buy or not?" Then what is this? Then say Chinese stock is a gamble. Everything is you guys don't waste time with the index, and Chinese stocks cannot uninvestable. If I would just put in my thoughts, right? Simply put, now it's very macro, very news driven, meaning everybody's speculating, or there are a lot of traders exchanging hands on what the Chinese government is doing. So now it's very policy driven. And in fact, I think if you were to argue over the last 5, 10, or however long the Chinese market has been, it has always been very policy driven. I think policy has been taken a backseat pre-2020 because people see Chinese market just keep going up. Your Alibaba, Tencent hit all-time high. They were in the top 10 biggest market cap of the world in 2020 or 2019. Then people tend to forget about the policy risk. Then the policy risk came back in again when they started cracking down on like your education company, on your big tech company. Then they realized that, wow, this is uninvestable. That's why you see this very big correction. My personal opinion is always probably something more balanced, which is somewhere in between. Meaning there is policy risk, but I still do think that there are rules for the idea of value investing, picking quality companies, being able to expand effectively lah. So that's my core position. But then back to this question again, which is this coming Saturday, there'll be another meeting, which is more focused on the fiscal stimulus. And I think the Chinese government has learned their lesson where they try to set it on a weekend rather than do it on a weekday where you see this kind of volatility. That's one. Right after the Golden Week holiday on Tuesday, they had another meeting. I think it was the National Reform. I don't know what's the NDRC, if I'm not wrong. And people were expecting a lot, but they under-delivered. That's why the whole stock market kind of dumped. But I believe the NDRC is not the correct ministry to announce this sort of fiscal policy anymore. But I think the tone that they set out in the meeting was that we know that there's some troubles. We are going to introduce some sort of measures, but there was not a lot of details. So traders or investors were kind of not very happy about it. That's why they all throw down the stock market. So in a way, right now you can see it's very, very news and macro driven. And everybody is just thinking what's to come. And rightfully so, because I think the stock market is a forward-looking machine. They are trying to predict in the next 6 months or 1 year what's going to happen. So it's just that because the nature of the Chinese market is that it's quite opaque and there's not a lot of news flow or news leaking. I think in US, not trying to say the market is manipulated, but it's more porous. So actually, you can see that there are quite a lot of activities being done pre that. There's a lot of guessing, and the guessing tends to be quite accurate. I don't know why is it accurate. You can say that people leak out info, but it has been accurate. So there's not such a big movement. But because China is so opaque, that's why they can 10%, 15% like that, up, down, like nobody's business like that. So it kind of explains the kind of the candlestick that we're looking at now lah. I still hold true to the position where the Chinese policymakers want to put a floor. Somebody corrected me in the comments, so it's not a cap. They want to put a floor to the valuations, but yet at the same time, they don't want the whole market to run to a very hot environment, meaning everybody just all in throw their house and mortgage and just go into Chinese stock market. So they're trying to strike a balance, which is like all economies and like all stock market, but it's getting a bit hard because people are trading on a lot of these kind of sentiments around today. So that's my general take. Back to Kelvin's question on whether can buy. I'm not buying. I can tell you what I'm doing. I'm not buying because I've already, I wouldn't say front run, but I've positioned my portfolio to buy, or I think I have enough exposure, especially if you feel this sort of greed and fear. My 2 cents is that I would try not to do anything.
Okay.
So Kelvin, have Chee answer your questions?
He was just doing a recap. I'm more interested to know, like, will all these stimulus, okay, obviously this stimulus alone is not enough lah. But I'm more curious is like, will the next few stimulus finally turn things around?
My short answer is I don't know.
Yeah.
But my long answer is I'm still long-term bullish, at least the medium-term bullish to some of these companies that I own. I do think that this is a very tough transition phase. But I think in my previous video, I did say that even at current valuations, like you talk about the 2 that I hold, which is Baba, Tencent, I do still see very big opportunity for them to double from here. But if you want to really pin me down to a date or timeline saying that, wow, 2025 doubling is coming, I wouldn't do that lah. I think naturally that's not my style also. But I think the risk reward here is that I don't really see a lot of downside risks, especially when these companies are still profitable, still buying back shares. The government has already stepped in to say that they're okay, or they're comfortable with where the tech companies are at. And I think valuations are still cheap. So yeah, I medium term, meaning the next 3 to 5 years, I'm still bullish. Short term wise, you want to trade news, want to trade this kind of fiscal stimulus, 1 trillion enough or not enough, 2 trillion, 3 trillion coming in, not my cup of tea lah. I can't advise you on that, or to say whether they are still buys or not. But I think let's also not forget that, because the expectations now, like what Kelvin pointed out, property crisis is still on a very big downturn. Even though we see some sort of uptick in the Golden Week, we are seeing some primary data that prices are stabilizing. In terms of buying year on year, there are some sort of growth rate as well. So that's a good, I guess, good first head start. But I think secondly, the idea of CSI 300, which is the top version of S&P 500, right? The top 300 Chinese companies. Right now, the expectations is that EPS will be negative year on year. So even after these rounds of stimulus, right, I think it's negative 9, 10, or 11%, around there, benchmark. So expectations of Chinese companies are still negative, meaning we are expecting, and the negative is expanding. It's at first it's a bit, then it's expanding, then now it's at around 9, 10%. So that's why it's very, very tough for me to tell you that yes, still can buy, even though I still see double upside, but I scared people cannot take that up down, left, right kind of movement and say that, well, I buy in already, then I sit on 20% losses. Because not forgetting that at one point in time, my Baba and Tencent was sitting at close to 50% losses. So it's a different mindset and different type of attitude when investors come in today versus they were able to sit those kind of losses back then.
So Eric, have you think about like entering China now, given that Chicking is trying to convince us to at least have some allocations to China, not like everything US.
Disclaimer, I think I have been talking about having some allocation to China in our private group chat since the start of this year for a very long time already. I keep saying, why not? No harm. But yeah, I think none of them have except Bunti. But
you buy VWRA, you cover entire stock market already.
But to Bunti's credit, his China allocation is a lot more overweight when compared to VWRA. I think that's
not very big. China is only 2.6%.
But your portfolio allocation?
Forgot already lah. Probably don't know 10.
Yeah.
So it's still very small lah. So Eric, are you not convinced of the current policy pivot? Can enter lah. So fast in, fast out.
No, I'm a really bad trader. I'm really bad trader. The reason why I not really interested to go into China is not because I don't want to make money. It's because I don't really understand the Chinese market as well as Chicking does. So if there's a downturn, right, a protracted downturn, I'm not even sure if I will have his conviction. His conviction is like very strong. Like we'll tell him like, China jialat already. Then he'll like, no. I don't think I can do that. I'll be like, China jialat. Oh yeah, looks like it's jialat. Then I'll sell it. If we go in now, right, the mentality, if we don't know anything about the Chinese market and we go in now, then when there's really a pullback, right, 50%, 60%, 70%, like maybe like just half a year, you cannot tahan already. It's like, wow, you keep looking at the rate every single day. It takes a mental toll on you. So,
but I'm curious, right? What is needed for someone to, for example, like from Eric current stage, current understanding of Chinese stock market, economy, all these things, right? To transition into someone maybe not 100% of Chicking, but let's say 70-80% of Chicking's level. What is required? Like, can we actually, like pick up some book, watch some video, then we can start to understand Chinese market? Because this piece of market, let's say if we just look at the economy, right? Actually, Chinese economy is very big. Stock market wise, like we just mentioned, right? Like the passive stock market country allocations, China is very small, but it's more because I understanding what is required for all of us to, learn more about how Chinese stock market operate, how's their economy operate, and including how their politics, their policy operates. I think these are the things that we need to understand to be comfortable, right? So just want to hear you guys
Yeah.
thoughts on this.
Interested to hear what Chiking said. What do you think is a website or some resources, right? That is like, if you go and visit the website, you read their articles, watch their video, or any YouTube channel that you subscribe to personally, that will bring us up to speed on how is investing in China like.
I think the short answer is you don't need to, because why bother, right? Because everybody say US market is the best, right? I mean, that's where most of the capital is being aggregated to. Because truth be told, like my own perspective is some people has been asking, specifically in forums they're talking about which is the best ETF to buy. Then they export some of these US concepts, right? Saying that, oh, this ETF, how that ETF, like your A50 and what. I think there is still merits to have an ETF exposure, but that's not what I'm doing. So that's why I cannot relate, or I cannot tell you that. I can tell you what ETF tracks what index, tracks what company, because this is a theoretical exercise. But to tell you that China ETF for the next 20 years, they're going to compound at a 20% growth rate, that one I cannot. And I don't know where the confidence of a lot of these US commentators saying that 10, 12%, sub water, easy, confirm 10, 12% next 20 years. I think they oftentimes drag out the last 100 years of how they perform and then tell you that that's how they're going to perform the next 100 years. I'll be a bit cautious on that front as well, because a lot of all these are trying to predict the future. And when you talk about predicting the future, there is always uncertainty and unknowns. So I wouldn't smash a palm on my chest and tell you that SPY can buy or A50 can buy. So that's one part. Because I do understand where the concern is coming from, where you said that you want an exposure to a big economy and China is the second largest. So you don't want a near zero kind of exposure. But at the same time, today you're asking me if you're not interested. It's like telling Bunti, hey, can you go and study about the Brazilian economy and the index and then tell me whether Brazil is a good stock market to invest in? Because like I said, right, for people that are interested in the Hong Kong, the Chinese market, they will go and find out resources. If you're interested, I can leave the links to the description below. But then the return on your time invested, is it worth it or not? Because you, at the end of the day, you can study a lot and then say that, okay, I'm still not comfortable, or I'm not willing to take this risk. Then what's the point? You just wasted like I don't know how many hours. But for myself specifically, I have been interested and I've been studying. So that's why it kind of gave me, and of course, I guess the bear market gives me a bit more, I'm more comfortable like that in terms of holding conviction, whereas compared to something that is priced to a very good high degree of expectations. So that's the first part. Then on the second part really is the idea where you naturally need to understand the Chinese economy by any means lah. I believe all of you are investors of Apple, of Tesla, of whoever. Don't tell me you don't even know a little bit of the Chinese economy, because 25 to 50% of their revenue is coming from the economy. What are the macro forces at play? Why is Tesla's China factory or China demand slowing down? You at most, or at the very least, you will know it at a very surface level. So it's not as if like you are completely insulated by the Chinese economy's property crisis or their consumption problems. You see it from the patterns of, I don't know, you invest in LVMH, in Starbucks, in all these different companies. So you are getting exposure like adjacently. Maybe not completely, but you are getting it adjacently. Unless you're telling me that you are completely passive, which I doubt so, because people that consume this sort of financial content, they are probably stock pickers, maybe not 100%, but 20, 30, 40%. So if you're studying companies, naturally you need to gain an interest and understanding there. So likewise, I would think that you probably would also know a lot better than the normal people that don't even touch this kind of individual equities at all. So that's the second part. And the last part, I think, when we talk about investing in China, right? Let's not also forget that China is a very, very big place. It's a very big economy. It's a very big stock market, and some areas might be doing well, some areas are not doing well. Very hard to read this kind of macro predictions and what as well. So that's why I always listen with a pinch of salt, whether is it on US Western social media or on Chinese social media. When people are damn cocky or damn confident, I think your alarm bells need to go ringing, because I believe even their state or even their own government people, they also don't know. They are on a testing and experimenting approach. They try to adopt this policy, they pivot, they do this, they pivot. But for those with absolute certainty and tell you that 100% of circuit breaker, I think you need to be a lot more skeptical on that, because it's really a very big monster that we are interacting with today. So yeah, that's my. I always veer a lot and a very long answer, but I hope I give you more clarity and context.
For most investors, they don't have to force themselves to go into China just because it's undervalued lah. Because value is one thing, expectation is another thing. So as long as the companies can outperform the expectation, it will continue going up until the next big crash lah. And this big crash is not limited to just the US, right? It's also for every other stock market, right? As long as there's other unexpected stuff, the big crash will come back in. So for me, I will just stick to what I know, like the US market.
We can have another follow up after the announcement on Saturday lah.
I already said so macro is not my what's that called? My area of expertise. They can read out 500, 1,000, whatever number, this fiscal stimulus, this kind of coupon, how they're going to affect. I can only do a very surface level understanding. So because my bottom line conviction is still that I don't think this is the start lah. A lot of people are expecting this is the end of China. I'm taking the reverse view that I think this is the start of the whole, whatever you call it, stimulus, economy recovering, property resuscitation. So that's why I still hold steadfast to my conviction. It's just a difference in point of view. It's the same thing as Kelvin keeps saying S&P 500 will 100 years will continue bull run, right? Then a lot of people
I never say that.
people keep scolding him that it's a bubble, it's a bubble. It's just a reverse in you are taking in two opposite sides of the camp. So similarly, we are talking on different frequencies. That's why we will never come to a conclusion or consensus. So people that hate on China will still hate on China. People that are optimistic on China will still be optimistic on China. So that's why I think it's no point stirring this pot where you're just creating more. Two people are not talking on each other's wavelength. Then people that are bullish, right, will listen to you. Yeah. I agree. So I'll go all in and leverage. That's what I'm more scared of. So because it's a echo chamber, but likewise, I just said that I do think this is a start lah, and we are seeing some sort of recovery and intervention here. Yeah, I don't know how many more. I don't know to what extent, to what intensity, but I'm putting my money where my mouth is at lah. I'm betting on this whole expectations being priced very low. Companies are still doing quite decently well.
I think for most investors, you don't really have to choose a side. Like just buy something like BWRA, 6 to 10% return annually, without having to think so much about investments. I think it's very, very good return already lah. So just do that and you'll be fine as compared to many other people. Okay, thanks, bye.